You wake up to your feed, and the same line repeats on every ticker. Intel surges after a surprise $5 billion investment. The stock that many had written off is suddenly back in the headlines. Headlines are efficient. They compress drama into a few words, but they rarely tell the whole story. So let's unpack what really happened, and then ask a stranger, deeper question. What does this moment reveal about markets, power, and the stories we live inside as a society? First, the facts. Intel announced a strategic $5 billion investment in Intel, a move that immediately sent Intel shares rocketing, a move that analysts called transformative, and that sent shockwaves through ETFs and funds that hold the chipmaker. Reporters described it as a historic collaboration. NVIDIA buying Intel common stock at a set price, and the two companies agreeing to co-develop chips for AI infrastructure and PCs, a pairing of NVIDIA's GPU dominance with Intel's x86 and manufacturing scale. The market response was visceral. Intel spiked, funds rebalanced, and suddenly the whole semiconductor conversation shifted. To the market, this was clarity arriving in an instant. To the company, it is a lifeline at a precarious juncture. To the public, it looks like a plot twist, an underdog grabbing a new lease. And to the philosopher in us, it reads like a parable of hubris, decline, and possible redemption. But the facts need context. Intel is not a startup. It is the company many of us grew up with, the microchip giant that once defined the PC era. Yet in recent years, Intel struggled. A leadership change in late 2024 marked the end of a tumultuous chapter, a CEO departure that signaled a failure of turnaround plans and set the company on a difficult path of reevaluation. Meanwhile, the industry's tectonic plates shifted toward AI and advanced node manufacturing, terrain ruled by rivals and specialized foundries. Intel's foundry ambitions have been a central part of its resurrection story, but they also carry risk. Scaling manufacturing and landing major external customers is both capital and expertise intensive, and investors have long questioned whether Intel can compete at the cutting edge. Why does all this matter beyond profit and loss? Because companies, especially giants like Intel, are social organisms. They embody strategies, narratives, hubris, and fear. Markets do not price only machines and balance sheets. They price trust, credibility, and future possibility. When NVIDIA, the company widely seen as the godfather of AI, places a multi-billion-dollar bet on Intel, it's not just a capital allocation, it's a signal. Someone influential believes Intel still matters. That signal ripples through investor psychology and through the broader story about who will lead the coming era of computing. So, let's look at the human side. We are narrative animals. Economists talk about fundamentals as if numbers speak plainly, but humans hear numbers through stories. Is Intel a dying incumbent or a phoenix in the making? The same fact pattern can be spun either way. If you're a believer in turnaround narratives, the NVIDIA investment is proof. Redemption begins. If you're a skeptic, it's a temporary sugar high, a pump in response to a headline. Both read the same headlines. Their interior stories, their prior commitments, determine which way they vote with capital. Philosophically, this brings to mind an old idea, the herd. From Aristotle to modern psychologists, we know people imitate. Markets are the herd writ large. Behavioral finance teaches that momentum, herding, and narrative bias often swamp sober calculation. A catalytic event, a strategic partnership, a prodigious investor stepping in can flip perceptions. Suddenly, inertia turns into enthusiasm, not because the machines changed overnight, but because the story the market tells itself has changed. And there's power at play. Think of Machiavelli's warning. power does not expire quietly. When a company loses ground, new alliances can be the tool of survival. NVIDIA's move is strategic. Gain a stake in the Intel ecosystem, and you buy influence over silicon supply and PC integration. For Intel, the alliance is a form of political capital, a way of rewriting a narrative that had grown bleak. In business, as in politics, optics matter. Alliances rewrite the possibilities of action. But alliances also triggered deeper questions about sovereignty. In 2024 to 2025, governments and regulators joined the stage. Public policy and national security intersect with corporate strategy. Reports suggest government stakes and interest in strengthening domestic chip manufacturing have been part of the backdrop to these corporate maneuvers. When public actors step in, whether as regulators, investors, or policy facilitators, they change the calculus. The technical question of can Intel produce advanced nodes becomes entangled with political questions. Should we have domestic capacity? And who controls the critical infrastructure for AI? These are not only economic questions, they are questions about autonomy, national strategy, and who we trust with technological futures. Let's slow down and consider the ethical dimension. What does a market-driven rescue mean ethically? If a private company's survival is underwritten by a powerful partner, stakeholders change. Employees may feel relief, jobs saved, factories continuing. Investors may cheer, but the public may ask, did the market choose the best steward of innovation? Did political influence crowd out merit? These tensions are real. They speak to a broader moral question. When the future matters, who should decide? The technocrat? The market? The state? Each answer carries risks, capture, inefficiency, and moral hazard. Another philosophical angle is humility. Intel's story has shades of hubris, spending too much on projects that didn't pay off, moving too late in the AI race, or underestimating rivals. Hubris is familiar in corporate mythologies. The very conviction that one's founded success can be endlessly repeated tends to blind leadership to changing realities. Nietzsche wrote of the danger of frozen values when institutions refuse to reevaluate. Intelligent actors must cultivate a kind of institutional humility, the willingness to pivot, to partner, to admit previous bets were wrong. Perhaps that's precisely what we're seeing in these recent moves, an institutional humility, expressed as partnership. We should also examine the psychology of hope. Recuperation stories are intoxicating. Investors want a comeback, employees want continuity, leaders want vindication. The danger, hope can mutate into denial. Betting on a spectacular turnaround can become a self-fulfilling prophecy or a costly misallocation. The wise investor or thinker resists the seduction of either wild optimism or default pessimism and instead interrogates probability, incentives, and timelines. And there is a market-level lesson about fragility and robustness. Talabian thinking reminds us that systems can be fragile, they break under stress, or anti-fragile, they improve under stress. Intel, with its enormous fixed costs and capital-intensive foundries, can be fragile in the face of technological disruption. Partnerships and policy support can transiently bolster it, but will they transform fragility into anti-fragility? Will Intel's structure allow it to learn, iterate, and benefit from volatility? Or will it simply be a giant stabilized by outside capital, still vulnerable to long-term tectonic shifts? These are the strategic questions that matter beyond the daily price moves. Let's pivot briefly to the social effect. When a major stock moves violently, a 20, 25, 30% surge in a day, it ripples through ETFs, mutual funds, and retirement accounts. The volume isn't just traders' excitement, It's pension allocations, index rebalances, and everyday investors' retirement savings shifting. News that a single firm's fate is tethered to a headline creates a broad social dynamic. People who never think about chip design suddenly feel invested in the future of semiconductors. Seeking Alpha and market reports noted the ETF shockwaves accompanying the recent rally. The economy is human. Its tremors are social too. So what should a thoughtful person do now? First, recognize the difference between narrative and durable change. The NVIDIA-Intel collaboration is headline-worthy and may have durable consequences, but headlines are not the same as sustainable strategic advantage. One should ask, does this partnership change Intel's long-term cost curves, technological roadmap, and competitive moats? Or does it mainly buy time and confidence? Second, understand